Hey everybody, it's Mike from Orderflows, and welcome back to my channel. I've been looking at some of the comments on some of the recent videos, and one of the comments that I got was asking about euro currency. Well, there's actually a few comments asking, does order flow work in Forex markets? It does, but honestly, I'm a futures guy. I'm not a Forex guy. However, when I started in the futures industry, I actually worked on the CME floor back when there was still the Deutschmark and Swiss franc. This was well before the time of the euro, right? We had the currency quadrant, which was I worked in the spot where we did Dean Witter, where we did Deutschmarks and Swiss francs. The other side of the pit was Jap yen, British pound, Aussie dollar, Mexican peso. Obviously, now that we don't have the Deutschmark anymore, it's the euro currency. So there's always been sort of a fondness in my heart for the currencies. And, the euro currency is a great contract to trade, especially using order flow. Now, you can use a minute-based chart, or you could use a range-based chart. People, yesterday a question came up, why do I use a minute-based chart? Because, honestly, that's a chart most traders are familiar with. People like to get into sort of, these really refined charts for a specific market. I just find it's easier to explain something on a time-based chart. Everybody's familiar with that. If I start to dig deeper into, say, like whatever, a 497 tick chart or whatever, something like that. Not everybody's going to want to use that, but everyone's familiar with time-based chart or even a range-based chart. Now, for currencies, like I said, a minute-based chart is fine. On the CME Euro currencies, I think you could use an 8 range or a 10 range chart, but I'm going to start here with a minute-based chart. Now, this is kind of a basic footprint chart, right, with your imbalances, your point of controls, your delta at the bottom. And one of the things that I like to use, because when I first released the Orderflows Trader software in 2015, I was trading euro currencies. Was one of the markets that I was actively trading, and I used a lot of minute-based charts and as well as 8-range charts. And what I've found was, point of controls play a pretty important part in my analysis of currencies. What is the point of control? It's the price level in the bar with the most volume, right? It's really simple, nothing fancy. You're just looking at the price level, right? A bar will cover a bunch of price levels, but the one price level that has the most volume that was traded on the bid and the offer, not in the two-way auction, just at that price level, is going to be your point of control. And this is sort of how the whole concept of prominent point of controls came about, because I found that there were certain point of controls that mattered more than others. Now, you'll see if it's this magenta, that's a bearish prominent point of control. Now, you'll see also here there's, cyan would be a bullish prominent point of control. This is cyan. This green line is what we call a slingshot point of control. This is another form of point of control analysis. You're either going to have bullish ones or bearish ones. Now, on the Orderflows Trader software, if you were to go into the settings, right, you'll find it in here under POC slingshot, right? You can see red and green. Prominent point of controls until tested, cyan and magenta. I use prominent point of control level 1, prominent point of control level 2. And basically what I would always look for in the currencies are these areas of heavy volume coming in, right, after ends of moves. Right, we had a move up here, then we made this new high. This was today, what's today, Thursday the 17th of August. Then we start coming off, then we get the red candle with the heavy volume up near the top, light volume inside. These are thin prints, obviously the 001 in here. We had this little bit of a sell-off and on the way down. But then, on the way back up, we got another bullish point of control. This time it's a slingshot point of control, followed by another one here, another one here. These are prominent point of controls here and here as the market moved back up. And where did we trade back up to? Well, we trade back up to where we had this previous prominent point of control that wasn't tested in the next bar, right? When I'm looking at prominent point of controls, I like them to be untested in the next bar. What does that mean? Well, for example, if this is a bearish prominent point of control, it's met on the point of control basis, but the next bar test it, right? We opened up at 109.22.5 and traded up to 109.23 and basically filled, for lack of a better word, that prominent point of control. When it's unfilled, meaning untested, it, in my opinion, has more strength, right? And I have a bunch of followers that have been trading with me for a long time that they wait for these prominent point of controls or these slingshot point of controls to appear and be untested in the next bar, and that's a trade that they love to take. And again, point of controls, prominent point of controls especially, can act as support or resistance in the market, right? Again, you'll see our high of the day at this time, right? We just made our new high up here at 109.34.5. Bearish prominent point of control coming in at 32. Market sells off. Where do we rally back up to? Well, we get up to 32, 32.5, 33, 33.5. So just a couple ticks through, right? And then we start coming off again. You got another bearish prominent point of control, one here, but it's tested in the next two bars. Another one that's not tested. Came back up here to try and test it, but didn't quite get into that area. So it is left hanging out there, right? It's an abandoned point of control, a virgin point of control, if you will. And we sell off. Where do we sell off to? A point where we got a bullish prominent point of control. And what's interesting about this bullish prominent point of control that's formed is it's coming one tick right above this earlier slingshot point of control, which is also a bullish point of control. That's this green line. Where's it coming in? I believe right here. It's at 17.5, right? It just sort of jumps up. But look at that. I mean, it comes right down to the tick. You put in another bullish one. And what happens? Market rallies up to where? Where you had the previous point of control, previous prominent point of control coming in. Then you kick off with another bearish one, a point of control on the extreme, right on the edge of the bar, and then the market sells off. Okay, that's why, when I talk about point of controls becoming market generated, they're the result of market generated information, the result of actual trading that's taking place. Why is it important? It's because, you have strong passive buying coming in down here, stopping volume, if you will, rallies up to where you have selling volume coming in, stopping volume as well. This time it's selling. Down here was buying to stop that move. Okay, and you can see how the markets just constantly go back and forth between these levels, right? It stops here, comes back up. You got a bearish one. See, it comes down right to that tick, sort of holding these levels. Comes down here, makes a new low or new swing low, rallies back up to where you had those prominent point of controls from earlier. Okay, now this is a time-based chart. Euro currency, right? I like to use 8 range charts. You could also use a 10 range chart. And again, I'd be looking for sort of the exact same things. Now, obviously, things are going to be a bit different because now this is a range-based chart as opposed to a time-based chart. So the bars are going to be forming different, right? The bars are going to be moving based off of price movements, for lack of a better way to explain it. It's a range-based chart. So bars will form as the range as price starts moving. Okay, and you can see bullish prominent point of control right down here, right? Comes right down, got this nice swing low here, bullish prominent point of control. Goes up, working our way back up, a bullish prominent point of control, and then one here as you're making new highs. Now, you don't have the bearish prominent point of control up here at 32 that you had on the minute-based chart because the bars are constructed differently. Got a bearish prominent point of control here, but it's been tested in the next bar. You got one here, okay, barely tested it in this bar, but came right back up and tested it and sort of invalidated it there. One here, one here. So again, if you're taking these shorts, like maybe you're getting short off of this, you get stopped out, fine, just wait for the next trade. Next trade comes in, right? And, so, you lose here, you lose here on this, trying to get short off of this prominent point of control. But again, where would you be getting short? In this case, all right, you have the bearish prominent point of control forming in this bar, but you're waiting for this next bar to complete. It's not that you just have a bearish prominent point of control and you immediately get long or short, or get short rather, it's a bearish prominent point of control. You got to wait till this bar closes, although it's a range-based chart. It's going to get within one tick of it. And, okay, it doesn't test it. Maybe you want to wait till you do want to wait till the next bar forms, but maybe you want to wait a little bit to see if it's going to test it right off the open or not, like you did in this bar. But if you're getting short, somewhere around the close of this bar here, all right, with a stop just above that high, just as here. You're getting short off of this candle here, right, because you got to wait for this bar to close, you know, and your stop's just right above it. So it's not like you're getting short in these two cases way down here, okay? Or maybe, you know, you want to wait for the prominent point of control to appear, then the next bar to be red, right, as opposed to a green bar that's working its way back up. Like this is a green bar, this is a green bar, there's a red bar, okay? Now you could get short, or look for either get short immediately once this red bar closes, or, you know, look for a little bit of a pullback and get short. I'm not saying it's going to pull all the way back up here, but, you know, you got to be ready for those to catch these trades. So even if you got stopped out here, you know, maybe you lost 5 ticks, up here you lost 5 ticks, you know, you're talking a move from, I mean, you could realistically have gotten short right on the open of this bar at 01.5. And then it just, you know, quickly, you know, this is 10.05, you know, over the next 30 minutes, trades all the way down from, you know, what is that, 1.5, all the way straight down. I mean, there's no red bars, or sorry, no green bar up here. This is your first green bar right here, you know, down to 87. Right now, this market trades in half ticks, so that's like, you know, what is that, about close to 30 ticks. Then you get another bearish prominent point of control right here. A similar thing, right? Now, in this case, it started to go down, sort of came back up, worked its way back up. Doesn't quite stop you out here, but then you got a nice bullish prominent point of control that you could take advantage of here. And the next bar comes within 1 tick of that. Okay, then it closes up here, and it's your sign to get long. And it moves back up. Again, we have this bearish prominent point of control right up here at 08.5. Doesn't quite get there, gets up to 5 before it works its way back down. Okay, so, you know, that's the whole idea of trading around prominent point of controls. Now, just really quick, that is on NinjaTrader. Okay, now if you are into, let's say into Forex, but Go Charting, okay? Go Charting is a web-based platform that my indicators are now on. You can actually use, you know, all the Orderflows tools on there, but if you're going to be trading Forex, I would recommend Go Charting as your platform for charting, as opposed to the NinjaTrader platform. One, it's actually a bit cheaper, but NinjaTrader is more geared towards futures traders, okay, whereas Go Charting is more of a general trading platform. And again, you know, if you're looking at prominent point of controls, the nice thing about Go Charting is, you know, you can sort of scrunch up your charts, and you can see these areas where there's the prominent point of control coming in here. I'd have to clean this up a little bit just so you're not confused by a lot of these other lines here. Just give me a second. I will turn off extension, and I'm going to turn off one other thing in here. Let me go. Okay, I got prominent point of controls on. I'm going to turn off the thin prints. So the nice thing is, if you're just using a simple bar chart, right, you can see bullish prominent point of control, bullish prominent point of control, bearish prominent point of control, bearish prominent point of control, right? That is not tested in the next bar, right? And, you know, another bullish one down here, right? You could just, you know, that's on a 1-minute chart. You know, maybe you want to use a 5-minute chart and see if there's anything in there. Sometimes there is. I prefer to trade, you know, here's a bullish prominent point of control on the 5-minute chart. If there's anything else on the 5-minute chart, but again, it's something you could take a look at. Even, you know, the nice thing about Go Charting is, you know, you can get all the pairs. You get it's from the data is from Rwanda, so, you know, maybe you want, I don't know, euro Jap yen, euro versus the yen. Again, it's a 5-minute chart. You know, if you're trading on the short term, right? See in here. Nice bullish prominent point of control here on the way up. You know, there's a bearish one down here, not tested. And, you know, there's a bearish one here. You can see the market came right back to that level, literally, and then came off again. Here it got within 1 tick This is the euro versus the yen. So you get all these pairs. I don't know what to look at. Gosh, Singapore dollar. Get the pound versus Singapore. I don't even know what this looks like, honestly. So I don't even know if there's going to be anything in here worth trading. But here's a bearish one here. Again, this is on a 1-minute chart. Bearish one there, bearish one there. So there's some moves to be had, right? Here, on the way up. So again, if you're going to be trading Forex, I suggest the Go charting platform. And again, right now you can get the Orderflows Trader software for free until the end of this month. If you want to play around with prominent point of controls and their importance in markets. All right, everyone. Thanks, and I'll catch you guys on the next video. Bye-bye.